covered that auto news that's breaking in the United States. Bryden Teich, partner and portfolio manager at Avenue Investment Management, is back with us now. I mean, getting back to business, that's obviously an encouraging thing to see. But I think, as Courtney was highlighting there, tensions with workforces over wages. This is look, people need to make fair wages, but the inflation story is complicated as well by wage pressures.
Yeah, and I think what also highlights, really how damaging inflation is to workers in any industry. And so I think exactly your point. I think we're going to see a persistent sort of strike and hard bargaining environment continue. And I think, for companies that are able to afford higher wages based on their profitability, that's okay. I think the challenge becomes for a company, if we now enter a recession and there's lower demand for cars and they've just promised wage increases, you unfortunately get into a period of time where the company then has to start cutting labor because there's just not enough demand for the product. So in a cyclical production industry like cars, you want to be happy that workers there are getting a raise, but then heading into a weaker economic environment makes you uncertain about the future viability of certain jobs in certain industries as it is. So it's kind of it's a win for today, but it puts the company in a tougher position, which I know where sympathies for people lie, but it's just there's a bigger picture complexity to this.
The math is all connected. That's the world we live in. The companies, they're public. They reported results in the last week or so, and they said they're going to have to make up some cost differentials, and it's not clear yet on where those will be. So to your point, it's something we'll have to continue to watch. Against this backdrop, though, we teased for our audience earlier, you'd give us some ideas on things that you think might be a good consideration for investing in right now. What would be a pick of yours?
Yeah, the one that or the sort of sector that we're increasingly looking at and becoming excited about with how we think things can unfold is actually coming back around to being excited about gold again. And I think really the logic behind that is essentially whether the central bank raises rates again this week or if the Fed is done. We think that as short-term interest rates sort of, let's say, fall a little bit to price in an expected cutting cycle, generally when 2-year interest rates, which are that line in blue, when 2-year interest rates start falling, it's generally a very positive backdrop for gold. As hiking and tight money policy gets priced out and people start to front run that next cutting cycle, gold is actually a favorable spot to be. So we're coming back around to, we do own Franco-Nevada and Wheaton precious metals royalties, but we're looking at adding potentially to those positions over the next couple of weeks because we think we could be in a window of time where gold actually does really well.
All right.